Hi, we all have noticed that employees are losing jobs, or stock market has lost its charm, or migrants are walking miles and miles to see their family, or even banks are getting bankrupt now. But have you ever noticed that there is a massive shift in the responsibilities of chief executives of the companies across the planet? So it has already made a big shift wherein all the chief executives' roles are redefined now automatically to weather this storm, to survive through this crisis. We all know Steve Jobs, Bill Gates, Mark Zuckerberg, or Sundar Pichai, Satya Nadella, but do we really know who are the CFOs for the company? No, we don't, because they are not the people who are in limelight. They used to spend their time sitting in the office, making the plans, executing the finance decisions, but now the time has changed. CFOs are there in the limelight to manage this pandemic. If not forever, at least the immediate future of all the businesses across this planet will be driven by CFOs only to weather this storm, to survive this crisis. And you must have noticed there are a lot of changes in CFOs in many companies because the traditional CFOs might not be able to manage the role. So expectations have changed. The responsibilities have completely changed. So the new CFO, the redefined CFO of the businesses now, do not have the responsibility to only manage the fiscal aspects. They have to manage the operation part, they have to manage the business part, they have to know the relationship dynamics, they have to know how can you cut the cost without impacting the profit, without impacting the people. So there has to be a greater level of balance, and that is required. So that's where this entire role of CFOs are going for a massive transformation now. So while everyone is busy in speculations, they are speculating the impact of this pandemic, they are speculating aftermath effect, what will happen once we resume the office, how many jobs will be gone, how much salary will be cut, how many product lines will be damaged. The only person who has the mathematical data, who has the data and facts to arrive at a approximate number, approximate impact based on a calculation is the CFO of the company. Not only that, so he has to calculate the impact, he has to forecast the future, he has to revise all his calculations, and then along with that, he has to plan the mitigation as well. That how can you mitigate, how can you minimize the risk, how can you keep the show on, how can you just keep investors happy, how can you keep the employees happy, how can you make a balance between your customers, your employees, and investors. And so this entire responsibility falls on CFOs of the company only. So we'll talk about the immediate responsibilities, the immediate action plan of CFOs of the businesses here. My name is Shammi. I'm co-founder of a knowledge sharing platform Charter Times, and I'm helping companies to cut down their cost, stabilize their businesses, and a lot of management consulting work as well. So we'll start with the immediate priorities of a CFO here in this video. We'll also discuss about what could be the opportunities to cut the cost down, what could be the inherent limitations for CFOs in this series, and also we'll talk about the relationship dynamics which has to be revisited. So one of the biggest priorities, one of the immediate priorities will be managing and strengthening the cash reserves of the company. We all have heard of saying cash is king, but this is the time to experience it practically. And most of the organizations are doing, they are already suffering because of inadequate cash reserves. So, in a recent study, PwC has already interviewed 288 CFOs in US. Out of that, 50 they have taken from the Fortune 500, and they all have agreed. At least 80% of them, more than 80% of these CFOs have agreed that the revenue and the profit will not remain the same in 2020, and it will drastically go down. So, if that's the case, we understand the pressure, how much this working capital, lack of working capital is going to create on the business. When your top line is going to get significantly reduced, but your expenses remain same. You have to still pay the rent, you have to still pay the payroll, you still have to pay the utilities, and you have to manage all the expenses which are committed, including the finance cost, including all the commitments. And along with that, investors will keep expecting lot of returns as well on the similar line of your past performances. So at this difficult time, the first priority of any CFO will be to maintain the cash reserves. Unfortunately, the entities who do not have adequate cash reserves, they might have to look for alternate options to increase it. There are a lot of measures announced by central banks. There are a lot of measures announced by the government. There are new credit lines, and stock prices have significantly got reduced in public market. So even the company who have adequate cash reserves have to look at these alternatives and find the best suitable options for them to continue their working capital management in a better way, in an effective way. The second priority we talk about is revising or revisiting your financial planning. So all the companies would have done the financial planning in advance in beginning of 2020, which is already approved, reviewed, and logged because no one could predict what is going to happen in this pandemic. But now all those numbers become irrelevant. You have to revisit the entire financial plans. You have to look at the impact of this COVID. You have to restructure your entire planning. You have to look at which expenses you can defer, which expenses you can prioritize, and that will make a massive shift in your financial planning numbers. If you talk about the impact here, in PwC report, 42% of the CFOs, to my surprise, are not considering any impact as of now for second wave of COVID-19, which is little difficult to believe. Most of the facilities and general capital expenditure will be deferred, for example. However, workforce and IT investments will be prioritized and they will be expedited. So there will be more investment required in digitalization of the work or automation of the work, which can help fighting these kind of scenarios. The third thing comes in priority, as per my opinion, is acquisition opportunities. There will be ample acquisition opportunities in the market, and a lot of companies are trading well below their intrinsic value. And this is probably the best opportunity to buy out this company, at least for a cash-rich company who have adequate cash reserves, who have enough fund. This is the time to evaluate all these companies who are available for the sale well below their intrinsic value, and they can definitely go ahead and buy it because this is going to get them a boost against the competitor. This is going to get a better return for their investors in long term. So this is something definitely worth considering, and the only person who has to look after this is the CFO of the company, who has to analyze the value of the company. He has to see the future economic benefits of the company and then find out the best available option which can be acquired. The next priority, in my opinion, comes about digital transformation. So companies, as of now, most of the companies are focusing on new ways of working, new propositions, agility, and right sizing. This challenging time is forcing companies to transform faster. You don't have time to think about it, plan it, and take it in 5 years plan. So you have to do it, all together. You have to plan it, you have to execute it, and everything has to be done at a very right pace. So there is a good saying that when the oceans are choppy and dangerous for fishing, fishermen repair their nets, and this is the time you have to repair your nets. And how you do that is, even if you're not working, you're not able to go to the office, you're working from home, the CFOs are still busy planning how can they transform the way of working. The next priority for a CFO will be understanding the regulatory changes. So there will be series of changes. Already central banks are announcing, the governments are announcing, and then a lot of other tax authorities and other departments are also announcing a lot of changes every single day. So it's CFO's responsibility to understand the overall impact of these changes, wherever it can impact in terms of some benefits to the company, or it can impact in changes in compliances. There are some due dates which are getting extended, or there are some additional reporting which are required. So the CFO has to understand the overall impact and keep the business ready, keep the company ready to comply with the new law or take the benefit at the right time for all the incentives which are announced to fight the pandemic by any of the authorities. Last one, I would say that you have to make a very good balance between cost and the growth. So all the factors which are present now due to this pandemic around you are compelling you, are creating immense pressure on the CFOs to optimize the cost. They do not have choice, but they have to optimize the cost. So this is the time when we are prone to make a mistake by selecting any wrong cost which can be detrimental to the long-term growth strategy of the company. So you have to choose it very wisely, the cost which has to be optimized, which should have material impact on the overall cost for the company, but at the same time, it should not impact the long-term growth plan for the company, and company should still remain competitive and it should still maintain the quality. So that balance is very much required, and that balance should be adequate to keep the show running, to keep the cost optimized, as well as to keep the growth momentum on. So these are some of the immediate priorities every CFO has to think about. So in the very next video, I'm going to talk about the expenses which can be easily optimized without impacting the revenue lines and the growth plan of the company. And that will be a very useful list for all of the CFOs right there who are struggling to find out the cost heads where you can make an optimization without having major impacts on the revenue. So there will be certain strategies which are already surveyed by one of the CFOs of the largest companies of Fortune 500. So a couple of strategies I have mixed to find out to make this list, which will certainly help you out. So once again, I would request you to subscribe to our channel and share this video with your friends if you find it valuable. Thank you so much.